Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap for Friday, February the 26th, 2016. My name is Doug McKay. I am the founder and head moderator for Quantum Leap. Each morning we come together in these live sessions to take a look at the market, macro to micro, take a look at the structure, and then we drill down to the trade levels that we're looking at for the day, the targets, and our hypotheses. This is a subscription room. We do these live sessions each morning, and then we do live trading and analysis during the course of the day. If you're interested in checking it out, I'll put up my contact information in just a minute. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. Okay, if you're interested in coming in and checking us out, here's my contact information. Send me an email at quantumleapfutures@gmail.com. There's no website, no blog. It's just us live every day. This isn't a commercial venture. It is just a group of traders trading together. You will need a Skype account. It's easy to open one up. It takes about 30 seconds to do. It's free. And then send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, there's over a year's worth of videos on YouTube. If you want to check out what we do each day and gauge it against the success of the market, just do a search on YouTube for Quantum Leap Futures or Quantum Leap Trading. If you like what I do, just follow me on Twitter at Crazy2. Okay, yesterday, we were looking for a rotational day, and I was thinking that we would come down and we'd auction this upper territory. I thought we'd actually take out the overnight low, and we left the overnight high alone. And it was actually a pretty, tough trading environment. There wasn't really a lot to do in this as we tried to break out. They came back in. We got into this upper distribution. They fully auctioned this whole upper distribution, came down to the LVN and rejected the LVN, came back up, and we traveled through value several times. And what we were really, when they left the overnight low alone, we were waiting for that breakout. They tried to break out a couple times and failed, and I kept on taking the long above 31, and finally we got the move. I didn't make a lot of money yesterday because there just wasn't a lot of trades, and I was focusing on just not letting losers run and taking them down. I ended up with a positive day. I ended up leaving when we made this move up here. I got out at 38. I think 38 or 38.50, and then I took the afternoon off because I figured the move would probably be mute from there. But sure enough, they took it up, and they took it up another 10, 11 points, and closed up there in the 50s. Was it 50s? Why do I have a different close? Let me just check something out here. Yeah, it was. I must have just chopped that one bar off at the end. So I mean, it was a tight day for most of the day, and then we finally got the expansion on the breakout. Overnight, I was looking for a move up into the 64. I'll show you why. I didn't, trade a lot last night, but I did catch a little bit of the move. But I was in bed by the time the big move. Just I can't trade 24 hours. I'm finding myself, I didn't even. I slept in yesterday because I wasn't feeling well, and I stayed up until 3 o'clock in the morning. I just can't do it every night. So I am human and have to understand my limitations. You can get to that point where you just don't want to miss anything, and that's when you start making mistakes in the market. So let's just take a step back. Let's take a look at the news. GDP came out much better than expected. Trade good balance came out not too far off expectations. We still don't. I don't know why we're not getting core PCE or good personal spending or personal income. Maybe they've changed the timing for when these come out, but they still don't. Maybe they're going to come out at 10 with the University of Michigan Consumer Sentiment and Inflation and expectations. So we do have news at 10:15, Powell speaks, and then 1:30, Brainerd speaks. So we do have some news that, and it's going to be interesting, the news relating to GDP. The economy has expanded a little bit quicker than what was anticipated. So it's going to be interesting what these two Fed members have to say. So just be careful today because we could get some headline news. I like to start each morning, as you know, same routine. I bring up a monthly chart and I start looking at where we are within the different time frames trend-wise and whether or not we violated trends. I use a 9 EMA and a 20 SMA on all my charts. Simple candlestick. What I'm looking for is slope and separation and where we're being challenged or violated. You can see we've had this beautiful trend up, and we've challenged it and we've broken below. Now we are above the month open now. Our month open is 1929.75. We're trading right now in the 63.50. So we're actually in a positive month for February as we speak. Right now, we've got 2 days left. The average true range is 38.54. Critical mass, we don't get into critical mass until we get into the 2007 area. So I don't think we really have to worry about critical mass today, but it'll be interesting tomorrow, Monday, the last trading day of the month, on where we are in terms of critical mass. Sunday night's going to be an interesting time. I would suggest that you all, be around for the Sunday open. I think there's going to be some opportunity there on Sunday night. Going to the weekly, you can see that we've had this downward trend. We're trying to get above it this week. Yesterday we were back below it. Now we're back above it again. We do have a naked cross up here at 2009.25. The reason I'm pointing that out is we do have critical. Actually, it's actually at 2007.75, 2008. The reason I'm pointing it out is that's right about where critical mass is. Critical mass is a theory that once you get beyond the open of the month, greater than the numbers of days left and the average true range per day, that one side could capitulate and the other ones could get aggressive. So what I'm looking for is the possibility either today, don't think so much today, but you never know, but definitely on Monday, whether or not critical mass kicks in and the bears give up and step to the sidelines and let the bulls take control and take us into the 2000s. But the trend itself is being challenged right now on the weekly. On the daily, a little bit of a different story. Let me just get rid of this open interest study. We've got slope and separation. So we do have a start of a upward trend on the daily. A little bit of a technical gap, but definitely upward trend on the daily. And on the 4 hour, you're going to see the same thing. You've got good slope and separation. We had nice trend up, consolidation, continuation. I'd be paying attention to this area down here. Actually, there's one area above, which is in the 1950 area that is a zipper zone that we could come back and retest. But the trend itself is up on the 4 hour. Same thing on the 1 hour. This is the zipper that I'm talking about right here in the 1950s. We could come back, test that, and then get a continue. We got an impulse wave last night, come back to the zipper zone and look for continuation further up into some of these upward targets. But we do have good slope and separation on the 1 hour. On the 30-minute, we had this technical gap, came down, closed it, tested the 20, now back above the 9, and we're getting slope and separation and possible continuation up. On the 15-minute, little bit of consolidation in this. They came down, challenged, tried to start a downward trend, created a naked cross right here, came back up, closed the naked cross. Now we're trying to hold above it. We are sitting right on top of the 20 SMA. Got a possible cup and handle setting up here on the 15-minute. So let's just take a quick look at that so we can see what it looks like in terms of whether or not it validates and where the retracement will be. So this will, to validate, we have to come down to at least 60. Well, we've actually validated because we're trading it now, testing the 61.8. I'd say 59. If we hold 59, that would validate this cup and handle and possibly give us a measured move. Just let's take a quick look at what that measured move looks like. Again, this is just a pattern. Patterns can be violated. We just use them as guides. We don't use them as entries. 1976.50 is the extended, and 1972.73 is the primary. But the overall trend is being challenged, and we're getting consolidation right now on the 15-minute. And then on the 5-minute, basically the same thing, coming down, testing the 20, testing this upward trend that we have. Naked cross right here is down at 59.50, so that's where I'd basically be drawing a line at in terms of whether or not the cup and handle gets invalidated. Let's take a look at the big picture now. This is going to be a little bit difficult for a lot of people to view because I got to scrunch my chart down to show it to you. So we're inside of this balance area of this microcomposite that runs from January 7th through to yesterday. And we've been chopping around. We had these gaps. We had an exhaustion gap. They came back, and they came all the way back down to the most traded price within this balance area, or what we call the microcomposite volume point of control, the VPOC, the MC VPOC. Buyers stepped in, shot us back up, chopped around the 23 area, and tried to break out of value 2 days ago, couldn't, and then we gapped up and we broke out of the value area, and we've come into this area right here. Now this area is actually pretty unauctioned. We're actually in between two major microcomposite VPOCs, and this is where it's going to get a little bit muddled, so just bear with me. We were up in this area, then we fell out of that balance, and we came down, and we traded within this area down in here. I've tried to draw a profile that makes any sense between all of these days, and it doesn't give me any more information because every time I bring a larger profile within this area right here, it incorporates days below and days above and gives me the microcomposite VPOC all the way down here at 1915. So 1915, okay, is something that you guys got to put on your radar screen for when we get back inside of this this microcomposite that we just broke out of. But right now we're in between two major balance areas. These ones above. So the balance, the value area low of this microcomposite's all the way up at 17.25, and the one we just broke out of down here at 1932.50. And we're in this really, really weird area that's got low volume and unauctioned territory. The major target above is where they tried to hold value just after they fell out of this value area up here at the 87.50. It was where we accepted price before we got in and made the run up into this, back into this area and back into this value area up here, and then it was where we tried to hold value before falling down and coming all the way back in and creating this new distribution zone down here. So this is the major target for me today if we get continuation. Now you can see that the last time, I'm going to just move this over now so that I can expand this out. The last time we were in this area, does this look familiar? Gap, 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 gap. All kinds of gap because there's no determined fair value right now in this area, okay, until we get up to the 64.75. That was why my target, I said my target last night was 64.75. And then obviously up into 87.75. But areas to note is this 53. I'm going to show you why when I'm going to show you why there's a zipper between 53 and 50 area. You've got the 61, 62 area, and you've got the 45. Other than that, there's not a lot of guidance here. It's going to be very very choppy in these areas, and we may not spend a lot of time in any one of these areas because there's no real determined price, accepted price in this area. This has just been chop and a fight back and forth between the bulls and the bears on whether or not we can go back up into higher balance or back into lower balance. So it's I caution everybody today, know where you're wrong quickly, because it can move. When it decides to make a move, it's going to make a move quickly because there's nothing holding it there. The magnet is going to be 64.75 to 62.50. Caution line is going to be, I'm going to use 60 myself, and below that I'm looking for a move back into the 52, the zipper from overnight, 52 to 50. And then the key line in the sand below us is going to be this 41. We got to look at when we get into this area, we really have to look at the smaller time frame and look at yesterday's profile. We can't look at the bigger picture because there's not a lot of guidance there. But you do have a CLVN at 60.75. I'm going to bring it down. I'm actually going to use I said 60. I'm going to shift that to 59.50 as my key trade. Above 59.50, I'm long into the 60 and 62 and 64.75. The key line above us is going to be the 67.75. Above that, I'm looking for 70 and 72, 77, 82 with the big target above. I don't know if we're going to hit it or not. There's just not a lot of guidance in this area. We can even take a look at the volume at time, and again, it shows in this area that we're in between this 49 up into the 2000s. There's not a lot in here in terms of time. There's there's this 80, 83, 84 area. There's the 49, 50 area. So it's showing a bit of a hole here as well. So let's take a look at what happened overnight. Overnight we opened and we chopped around in this zipper zone, okay? And this is why I'm saying that I'll be watching for a retracement down to this zipper and a test of the range high from yesterday's RTH session. Overnight we created a triple distribution zone. Come on. We created this, well, it's very messy up top, but you've got distribution up here with the LVN at 61. You've got LVN at 57 and 53.75, and you got this lower distribution where we launched from. So it's, you know, if we cannot hold above the 56.75, I'm even thinking that 58, 59 area, might have to adjust my thinking down a little bit, then we're likely to come down and test this lower distribution and test this zipper for possible continuation. We had an impulse wave up, and they might come back to the zipper and then create another move up into this 60 and 64 area. So let's just take a look at our chart and start moving our numbers. Now our weekly ATR has already been tested. We got up to 68.75. They've come off of it, but our weekly ATR upside target still remains the same. Our weekly downside ATR target is nowhere to be found up here, so I don't think it's a real big issue right now. Our daily ATR target, based on the low overnight, is up here at this 86.50. Remember I was saying I'm really looking at the 87 area, 87.50, because of that microcomposite VPOC, and also because it's our daily ATR upside target. There's a gap close at 86 and a naked VPOC up here at 85.50. So our overnight high is the 68.75. Our overnight low is 48. Lower part of that distribution, upper distribution from yesterday. Our VPOC, I'm not thinking we're going to get much of a VPOC shift, is at 60. Our half gap is going to be a little bit changed, 1959, 75. Half gap is going to come down to 55.25 approximate. So we have a LVN at 61.5. Don't really need this for much longer. 50. I'm going to use 54 and just adjust them accordingly. And that's about all I need from that chart. So let me get rid of that. So above the 61.50, I'm looking at 64.75. 67.75 is resistance. You know what? I'm not even going to put it in because it doesn't even, we're going to be right there at the overnight high. So if they get 67.75, they're going to have to try to go. It's really the 70.25 area, which is right at this CHVN, and then 72 will be the next major resistance. Above that, 77.25. 82 as resistance, and then it's all about this area up here between 85.50 and 87.25. hype. And then, if we get up in here and, we accept this price level, 91.75 is going to be the key line in the sand up here. Anything above that, I think we go for the 2000s. And then 96.50. 2000, 2003 and a quarter, and then critical mass kicks in, and then we got 08 and a quarter, 12 and 17 as the key targets above that. All right, below. See, it's very difficult here. There's really no edge here, gang. So you know what? I'm not even going to try to create a false one. The real first test is down here at the 54s at LVN. Below there, I'd be looking for a test and a takeout of the range high and the naked close. The overnight lows right there. Just below that is the lower distribution, and below that I'd be targeting down here at the 44s, and then below 44 a move down into this 42 area. Test of the value area high, midpoint, target VWAP. But once we're inside of here, I'd be looking for a move back into the daily ATR downside target, which is 1930 and a quarter, and the 27 and a quarter, and then the next key level is going to be this 21.75. Remember that 23 is the microcomposite VPOC that we just broke out of. And I'm going to move this down to 21.75. And then below that, the next big target below is that 15 area again, 1550. Oh, remember that, just want to mark this out. Why do I think that if we get inside of value, why we'll come all the way back down here? One big reason. Month open. Bears try to push down to get us back below that month open. So my main hypothesis is to see responsive selling on the open, a move back towards the gap, testing down in here and finding initiative buyers stepping in and taking us up for the continuation up into the overnight high and into the 70s. That's hypo 1. Hypo 2 is we move to take out the overnight high, fail up here somewhere in the 70 to 72 range, and work our way back down into the 50 and continuation lower to test the value area high from yesterday and get back into the 50% of the significant breakout candle is all the way down here, at 36. So that's what I'm looking at today. We are going to gap up, so it's not a huge gap. It's only a 10-point gap. So they should go for the half gap fill, but we always have to be prepared when we gap up to see initiative buyers stepping in here and seeing an open drive. I'm not going to bother with gold today. Gold has come back down again and working its way back towards the composite VPOC. I don't like trading gold at the end of the month, so I'm not even really interested in it right now. But as long as we stay in this balance area, I expect more chop. Below 22, then I think you're going to move back towards the 1211 and 1201. Above the 1222, I think we chop around here and move back into what is current balance up here in the 23 area. I don't think there's a great opportunity in gold today. So that's going to complete our session. Our Keltner center line is sitting at 62.75. If we hold below it, they'll take us move down to that 57 and more likely come into the half gap fill. We'll have to adjust this on the open. And if we get above the 62.75, a move up to the upper Keltner is going to take us to take out the overnight high. So that's going to complete our morning session. As always, trade well, trade safe, and we'll catch you on the flip side.